As you probably already know, the rich often have a lot of money to spare, and because of this, they are able to use a variety of methods to avoid paying taxes. The richest people in the world have a plethora of ways to avoid paying taxes. They do this by using their money to live in places where there are no taxes, investing in tax havens, and using their influence to get politicians to pass laws that help them avoid paying taxes. Welcome to Coffeepo.com, where you learn finance every day. If you have not yet subscribed to our channel, please do, as we bring valuable information every day to keep you informed and updated about finances. In today's video, we're going to be talking about the ways that rich people avoid paying taxes. Before we begin, if you haven't subscribed yet, please subscribe to our channel and hit the bell icon to get notified of our new videos. 1. Invest all of it. It's no secret that the rich have a lot of money, but what may be less well known is that the wealthy often don't pay a lot of taxes. There are a number of ways that rich people avoid paying taxes. Some of the most common methods include investing their money, using tax-advantaged accounts, and taking advantage of tax breaks. Investing is a great way to avoid paying taxes. When you invest your money, you can defer or even eliminate taxes on your profits. There are a number of investment vehicles that offer tax breaks, such as 𝐦𝐨𝐬𝐤𝐞 and 𝐦𝐨𝐬𝐤𝐞. Rich people often take advantage of tax breaks. There are a number of deductions and credits that can save you money on your taxes. However, these tax breaks are often only available to those who make a lot of money. While it's true that the rich don't pay as much in taxes as the rest of us, it's important to remember that they still pay a lot. In fact, the top 1% of earners pay more than half of all federal taxes. So, while the rich may have a number of ways to avoid paying taxes, they still contribute a significant amount to the overall tax burden. 2. Everything you use is owned by a business. If you're a business owner, you can buy everything as a company asset. That means your yacht, your private jet, your art collection, and your luxury home can all be written off as business expenses. This is the most common way that the rich avoid paying taxes is by setting up shell companies and using them to purchase everything as a business expense. This includes everything from homes to cars to private jets. By doing this, they can write off all of these expenses and significantly reduce their tax liability. 3. Move somewhere with little or no tax. This is another way to avoid paying taxes, though most of them are illegal. Perhaps the most well-known is to move to a place with little or no tax. For example, there are no state income taxes in Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. And if you're looking to move internationally, Monaco, the Bahamas, and Bermuda have no personal income taxes either. Of course, you can't just pick up and move without a plan. You'll need to have a job lined up or some other source of income. And unless you're wealthy, you'll likely need to find a place with a lower cost of living so your income goes further. But if you're willing to make the sacrifice, it can be a great way to keep more of your money. So if you want to avoid paying taxes, your best bet is to move to a place with no income tax. This isn't always practical, but it can be a great way to keep more of your money. Just be sure to do your research before you make the move. 4. Charitable donations. Charitable donations can be deducted from your taxable income, which can significantly reduce your tax bill. But before you start writing checks to your favorite charities, there are a few things you need to know. First, not all charitable donations are tax deductible. To be deductible, the charity must be qualified by the IRS. You can search for qualified charities on the IRS website. Second, you can only deduct donations if you itemize your deductions on your tax return. If you take the standard deduction, you won't be able to deduct your charitable donations. Third, there are limits on how much you can deduct. For most taxpayers, the limit is 50% of your adjusted gross income. So if your GI is $100,000, the most you could deduct in charitable donations is $50,000. You need to keep good records of your donations. The IRS requires documentation for any donation that is $250 or more. For smaller donations, you should keep a bank record or canceled check as proof of your donation. Making charitable donations can be a great way to reduce your tax bill, but make sure you follow the rules and keep good records. Otherwise, your deductions could be disallowed and you could end up paying more taxes than you owe. 5. Buying art. According to a new study by the National Bureau of Economic Research, the wealthy are increasingly using art to avoid paying taxes. The report's authors looked at data from the IRS and found that, between 2000 and 2013, the number of people reporting art purchases on their tax returns declined by 41%. The report's authors say that the wealthy are likely using art to avoid paying taxes because it can be difficult to value. As a result, they can claim a lower value for their art and avoid paying taxes on the full amount. The report's authors say that the trend could have implications for the art market. If the wealthy are using art to avoid taxes, it could artificially drive up prices. 6. Hold it in privacy coins. It's important to note that cryptocurrency is not anonymous. While it is possible to keep your identity hidden when you are buying and selling cryptocurrency, the fact is that all transactions are recorded on the blockchain and are therefore public. This means that if the IRS were to investigate, they would be able to see all of your transactions and could potentially tax you on them. It's also important to remember that you will still need to report any gains or income from cryptocurrency on your taxes. This means that if you do trade or invest in cryptocurrency and make a profit, you will need to report that on your taxes. The good news is that there are ways to minimize the taxes you will owe on your profits, such as by taking advantage of capital gains tax rates. So, it's important to note that using cryptocurrency to avoid paying taxes is not illegal. While it may not be the most ethical thing to do, it is perfectly legal. 7. Filing for bankruptcy. One of the ways that you can avoid paying taxes is by filing for bankruptcy. This is a legal process that can help you get out of debt and protect your assets. It can be a difficult process, but it is one that can help you avoid paying taxes. You should know that filing for bankruptcy will not automatically exempt you from paying taxes. However, it can help you discharge some of your other debts. This can free up money that you would otherwise have to use to pay your taxes. Also, you should know that there are some taxes that you will still have to pay even if you file for bankruptcy. These include taxes on income, property, and gifts. However, you may be able to discharge some of these taxes in bankruptcy. 8. Claim your yacht as your second home. When it comes to finding ways to avoid paying taxes, there are a lot of methods that people use. Some methods are more common than others, but one method that is often used by the wealthy is to claim their yacht as their second home. This may seem like a stretch, but if you have a yacht that you spend a significant amount of time on, it can actually be considered your second home for tax purposes. This can help you save a lot of money on taxes, as you can deduct the cost of maintaining your yacht as a second home. Of course, claiming your yacht as a second home is not a foolproof method of avoiding taxes, as the IRS can always audit you and determine that your yacht is not actually your second home. However, if you are able to convince the IRS that your yacht is your second home, you can save a significant amount of money on your taxes. 9. Gift money away. If you are looking for ways to avoid paying taxes, one option is to gift money away. You can give money to family members, friends, or charities, and as long as you stay within the annual gift tax exclusion limit, you will not owe any taxes on the money you give away. There are also a number of tax credits and deductions that you can take advantage of to lower your tax bill. These include the child tax credit, the earned income tax credit, and the mortgage interest deduction. Finally, remember that you can lower your taxes by making smart financial choices. For example, if you are in a high tax bracket, you may want to consider investing in a tax-efficient way. This can help you keep more of your money and pay less in taxes. 10. Multiple nationalities with no fixed residence. There are a number of ways to avoid paying taxes, one of which is to have multiple nationalities with no fixed residence. This allows individuals to take advantage of the tax laws of different countries and avoid paying taxes in any one place. Another way to avoid paying taxes is to live in a country with no income tax, such as Monaco or the Bahamas. There are also a number of legal ways to avoid paying taxes, such as using loopholes or taking advantage of tax breaks. However, it is important to note that tax avoidance is different from tax evasion, which is illegal. That's all for today. If you like this video, please give it a thumbs up. And if you want to hear more videos from our channel, subscribe and make sure to turn on the bell icon.